Que because she started panicking, like ella habló con su hermana, según ella. Habló con su hermana and she started panicking que porque no tenía que, like she started panicking because she went into labor, right? She went into labor.
Oh shoot, can you hear me? All right, cool. Hey Todd, if you on, I can't hear nothing.
I just figured out what the problem was.
Okay.
All right. So welcome to what I'm calling the Options Community MVP interview series. And the goal here is to give you guys access to some really dope people who are having a lot of success. Because the goal is for you guys to win, man. Like the goal is for you guys to win. And I feel like that comes a lot of different ways. And the reason why we have the community is because I feel like we're going to win by all of us sharing information, all of us sharing knowledge, all of us sharing what's working for each other. and what's working for ourselves. Of course, we have the admins. We have 7 at the moment. As of 2 days ago, we added 2 more. And then we also have somebody who kind of just works for me as like an associate/assistant. So you guys have access to her. So now we have 8 people that work for the community full-time. What does that mean? That means that you guys have people that you can ask questions and they're going to get back to you. It's not whether they want to get back to you. They're there to answer your questions. They're there to give you information on charts. They're there to give you all this stuff. So take advantage of it. I want you guys to get full value out of it. Today we have a special guest, CALLME100K. Also, CALLME100K on Instagram. So make sure you follow him on Instagram at CALLME100K. He's been killing the game. He's been like just killing it. I had one post, he did like 12 grand in a day. I also had another post, he had done like just crazy numbers, crazy numbers. So we're going to get to talk about that. And we're just going to kick it off. So welcome, man. I guess my first question for you is, who are you and where are you from?
First, let me just say thank you for even recognizing me and having me on. A little nervous because I ain't never been on a podcast or Zoom or nothing, so that's a big deal. And then excuse me if I kind of look off. I got some notes just so I could stay on point. But yeah, so I'm originally from Louisiana, and then I moved to Cali like some years ago. I guess pretty much just made like Cali my home. Been in the Bay Area, actually, not too far from you. And really, I'm just, man, what you see is what you get, like businessman, father of 1. I got a little 2-year-old. That's like my pride and joy. That's really why I do what I do. That's really why I go as hard as I go. That's my main motivation is building, that legacy that he can expound on and pass down to his. So, but yeah, I've been operating out the Bay for some time now. High, expensive California, which you know what that's about down there in Southern Cal.
Yep. What do you do for a living? What do you do for work?
I'm facilities manager at one of the top 3 hedge fund companies in America. For those that don't know, a hedge fund is basically when investors they take their money, and what the company does is they take the investors' money and they use methods like trading, and they make more money with it, and then they take the interest and then they give it back to the investor. So it's like, can you take my money and make more for me? And then we'll give you some off the top. So,
yep.
But yeah, yeah.
How do you find time to trade given your like schedule? Like working and being a father.
Well, you know what? So I've actually been making online money since 2012. If I can give a little backstory. So 2012, I was on Instagram and came across this brother from New York. He was doing multi-level marketing. And, you see the money pigs and you're like, what are they doing? Just piqued my interest. And so I did a lot of different multi-level marketing. I did like different travel companies. So I've been making money from my phone. And then anytime that I would need to like get like another 9 to 5, I would try to get something to where, because I always call my 9 to 5 like secondary, like that's my like side job, like my investing, all of my business ventures, like that's priority for me. That's number 1 for me. So like my job right now, it can be demanding. It has its moments. But for the most part, if I'm at my desk, my phone is right there. So I'm not always stuck in meetings. I'm not always stuck on the phone, like on a business call at work. I'm always running around. And sometimes that running around, I take advantage of the time and I just be like, oh, let me check this, let me check that. And then just being a daddy, I definitely know how to put my phone down when it comes to that, because I take a lot of pride in being like a hands-on daddy. So, if I know, we had those moments where we like, oh, I don't feel like playing, I don't feel like making this, but I think those are the most crucial moments when it comes to parenting, is those moments we don't feel like doing. So, with my son here, for the most part, I try to put it down, man. It's like I'm all ears. So
That's dope.
and you find time, you find time.
That's cool.
No excuses.
So where did you get your initial capital to invest?
Well, I've always been pretty good. At least I'll say within the last like 10 years, I've been pretty good at saving and investing. As a lot of people when I was growing up, like buying shoes and stuff, that was my big thing. But once I started diving deeper into like the whole entrepreneurship realm, my focus it shifted. It was like, do I want to spend more money on shoes, or do I want to spend more money on things that can bring me more money? And it just, as you see it come, and you see it into fruition, it's like, oh yeah, I need to keep doing this. It's just like if you're making a lot of money and you see it in your bank account, and somebody say, hey, can I borrow $50,000, Todd? You're gonna be like, oh, I don't know if I want to see that leave, because you continuously, it's compounding, it's stacking. So it's like with me, I'm seeing it grow, and I'm like, no, I don't want to see nothing, Leo. I need to keep adding to this. So it just became a priority for me. So it came, I had it. Like, I work, I save my money, so I already had it. And it wasn't that much. If I can share.
Yeah.
Yeah, my initial, so my first trade was June 5th. I had always had like long-term stocks. I've been holding stocks since 2015, 2016. And then my first trade was June 5th. And I think I invested about like 330. I think like 330 or something like that. And
$330.
Uh-huh.
Okay.
Yeah. Yeah, it didn't take me that much. And I didn't have to invest that. I'm sure I could have found a cheaper contract, but I could have spent less on that, but I ended up buying multiple contracts. So I had traded CrowdStrike. I don't know if everybody knows what that is. CrowdStrike is a cybersecurity company. And
what's the stock symbol for everyone?
Huh?
What's the stock symbol?
I believe it's CRWD.
Okay.
CRWD. I actually bought them when they were like 68 or 69 a share. Right now they kind of teeter-totter between 100, like 110. But anyway, I had traded them. Fastly, the ticker for Fastly is FSLY. They burned me on earnings today, but we'll talk about that another time. It was that and Fastly. And I made 900 my first trade.
So you invested 330 and you made 900.
Correct.
Wow.
Yeah. So
how did you find that opportunity? What brought you to that opportunity that made you know that it made sense?
Well, just CrowdStrike in general made sense for me. So the way I came across CrowdStrike was a lot of people may or may not be familiar with Wall Street Trapper on Instagram. He, for the most part, he more so markets himself as like the long-term stock investor, and so he was talking about like cybersecurity companies, and he actually mentioned that one. So I did some research and I seen like why it made sense, because and he's big on like staying ahead of the game. And I know there's something that you mentioned too. You always talk about you want like the news, or you want like your results to kind of validate what you've already done, the research and the work that you've already put in. Mm-hmm. You want that to be validated after the fact, not like before. And so it just made sense to me, because I'm thinking like, okay, this company is protecting like my data and my information on Facebook, Instagram, my email, like, and it just made sense. So like I got from the course that you gave, I studied the trends, I looked up their history, you know what I mean? I was seeing why they were growing. I was seeing the companies that they actually deal with. And I'm like, these companies, these social media companies that I just mentioned, like they're not going anywhere. So everything just made sense. I listened to their last earnings call, actually 2 of their last ones before I had made that trade. And I was like, okay, yeah, this makes sense. I saw the value, and then I just went for it. Fastly, I just I used to work right next door to them, so I was real cool with some people from there. And I would just always just do research on Fastly. Even when I used to work there, I was just like, what is this company about? For those that don't know, Fastly, it's a cloud-based company, and it's a company that people use to transfer like information. So it's a cloud tech company, but it just made sense. In fact, I want to say the second or third month of us being sheltered in place, they were rated like the #1 work from home tech company at one point. So yeah, everything was just making sense. So I was just like, okay, yeah, it made sense for me to just go with them.
I think that it's dope that you kind of invested in a space that you understood.
Yeah.
It's like you're in Silicon Valley, man. And your first two investments were tech-oriented companies because you know them at a deeper level. So you're not just looking at the chart. You're not just looking at all these different indicators. Yeah, you have those. We all have those. But you have the deeper knowledge that's going to give you an edge. I feel like that's so important.
I agree.
Can you tell us about like what your due diligence looks like? What other things are you looking for?
Yeah, I do like to look at history. I try to look at past history. I try to look at CEOs' backgrounds. I try to figure out, you know, why a CEO was chosen for that particular company. One thing when I mention history too is I also like to look at like how they respond to certain events, whether it's a holiday. You know, it could be a retail company. How does Home Depot perform during Christmas versus, I don't know, Labor Day? You know, and then maybe it'll kind of give me like a gauge on like, okay, this company may move by this particular percentage or dollar amount, or maybe they don't have as many sales around Thanksgiving as they may in December. Not like the pandemic, the recession. In fact, I'll give you an example. A lot of people have been hearing a lot about Walmart now. Like Walmart's name is starting to bubble in the stock world. I mean, maybe it always has. I don't know. I didn't hear about it a lot, but Walmart is starting to bubble in the stock world now more than ever, I believe. And I remember I had did some research. They, like Ross, Walmart, a lot of those discounted stores, they performed very well during the recession, when the recession hit, because you think about it, recession comes, pandemic comes, right? People they either don't have a lot of money or they get laid off and got to hold on to what they do have, or just nothing at all. And you got to think, well, I need to buy stuff, or I need to buy, I don't know, clothes for my baby. I need to get diapers. I might need to buy groceries and or clothes or whatever it is. You can't go to Macy's, right? Because we don't have Macy's money right now. We're in a recession, or we're dealing with a pandemic. I can't go to I don't know, Neiman Marcus. I can't go get designer. In fact, they closed 4 of their main stores during this pandemic. Like, people can't shop there right now. So you look at Walmart, you look at Ross. Like, those companies are performing well because it's like everyone's gonna go to Walmart so they can get a discount because they got to make their dollar stretch during these type of disasters. So it just made sense, you know, it's stuff like that. So yeah, but my biggest thing is like the history. Yeah, I look at the trends, I look at the upward trends, and then sometimes I try to match that trend with the current time. So like, for example, if a certain month that company spiked, I don't know, $50, $100 on their share price, but then maybe the month before they might have only did $25. Well, what was it? It wasn't earnings. So like, what was it? I don't know, maybe a product dropped, maybe they added a package to their streaming platform. You know, I just try to look at that type of stuff and just match it up.
Has your strategy changed any since when you started and where you are now?
A lot. A lot. Yeah. My so when I first when I first got involved, I didn't have much of a strategy. I didn't really have much of a strategy. I was really going for what was hot and what I was hearing, you know. I mean, my first 2 trades, like the tech stocks, that made sense for me. But even after that, I was like, oh, okay, I got some money. Let me see what's popping, right? Like, honestly, that's what I did. And I found myself losing more because it's true, man. Like when you chase the money, you end up losing, because I get it. Like I spoke on this today too on my Instagram. I was like, especially us Black people, no disrespect to nobody, but us Black people, we always big on talking about like, oh, get the bag, right? But like, we need to be a little bit better on like keeping the bag. And so I'm like, look, I'm losing too many bags. I'm losing. I need to hold on to my goddamn bag. So I was like, let me actually learn what this brother is teaching us. Right. I went through the course. It made sense. But again, I got anxious. I was like, oh, like I can make money. Let me do this. Let me do that. And I was just chasing. I was like, okay, let me stop chasing the money and let me just chase the knowledge. Let me chase the value in this skill. Let me actually learn why that company just made me money, not just because it was heavily traded or because everyone else said do it because they about to, I don't know, come out with a new car. I don't know if it was Tesla or whatever. Like, let me see why car sales boosted that much. Like, you know what I'm saying? So, I started going after more knowledge. You know what I mean? More of an actual strategy versus just going off of what's hot and what's not.
Yeah.
And I learned a lot. Like my mistakes. Oh man, it's got to be something like when you get into investing, you automatically taking a risk, right? Because you could lose it all. And you also have to, and I'm big on like understanding, right? So my thing is like, please, you gotta understand that you are gonna lose money. Even the master traders, the Ians, the Mark Monroes, you know what I mean? Like, we all lose money. And I'm not a master trader, but we all lose money. That's just part of it. And like you said, Todd, you can do all the due diligence in the world, all the research in the world, and it just might not be your day, The market it doesn't have to swing your way, and the market don't owe you a penny. So learning from my mistakes and just being okay with it. Cause, I've had days where I'm just like, man, like I'm just not hitting. I'm just not hitting. But I noticed the further that I get into my trading journey, the more I actually understand and can cope with it better, because, I've had some days where I've been sick. I mean, not literally, but I just like, all right, let me go outside and get some air, because this is messing me up right now, But at the same time, I say it's cool to make mistakes, as long as you learn from them. And, the biggest mistake a man can make is being afraid not to make one. If you come into this like, oh, I don't really want to lose no money. It's like, no, I don't need it, but I know that's going to come with it. And I also know that I can make a lot of money by learning why I lost that. You know what I'm saying? So just learn from it. You got to learn from them.
What things are you doing to improve as an investor and a trader?
I would say to improve. I mean, I'm more of like, I'm not the most technical versed dude when it comes to trading, but I will say for me, I'm more mental. So for me, just being mentally disciplined, actually listening to what is taught from people like you, people like Mark Monroe on the Come Up series, the Master Investor, Ian, or what he might say on the Earn Your Leisure podcast. Like, I'm more on like the mental side. I kind of I try to take from, the different traders and the different courses and the podcast. I try to take a little bit from here and there. And I just try to stay focused on that, because obviously if it's working for you guys and it's gotten you to where you guys are, and obviously I would think that we want to be there. We aspire to be great traders or create a lot of wealth, whatever. Then obviously what you guys are telling us and teaching us makes sense. So, and I think that's a big deal, because again, I know a lot of people can attest to this. We have taken your course, Todd. We have taken your course, and you said, take your profits. Don't get greedy. The young brother, the 13-year-old that was on the podcast, the other podcast before, he said it loud and clear: do not get greedy. And we do it. We do it. We test the waters, and we get burned by it. Sometimes we get burned by it multiple times. And so I think, again, me staying disciplined and saying, okay, this is what he said. Even if even if it looks like I could possibly make this and that amount, but I also know last time I tried to do that, it burned me. Let me not do that. It take a lot of discipline because the money looks sweet, right? Like it looks good when that stock is going up. It looks good. And when it's going up, you're like, oh, I know it could go up even more. And all it takes is for the governor to shut down something. And then you'd be like, I shoulda, woulda, coulda, you know. And you want to eliminate those. So I would just say just staying disciplined, staying focused on my strategy and not getting distracted. And when I say not getting distracted, also, a lot of times I'm in like 3 or 4 different groups, right? I got like Instagram groups, I got different apps, Facebook. And a lot of times you may have a strategy in mind, or you may have like a couple stocks that you want to focus on. But on the outside, right, you got people that's like trade this company. This company about to blow tomorrow. They just said that they got $5 billion. This company just said, and so you're like, oh shoot, like it's a party over there. It's a party over there. I want to go join that party. And what happens is you lose sight of what you had originally. And it's a lot. Like it's exciting. There's thousands of companies that can be traded. And I just think if you just stay disciplined on your strategy, once you develop one, then I think it's fair game.
Absolutely. Shout out to all the dope people: Ian Dunlap, Wall Street Trapper, Mark Monroe. I feel like we're kind of teaching. It's not just one course. Like you go to college, you don't just take one finance class. You take about 7 finance classes. And so I feel like you guys are going to get the most value out of your investment kind of like journey by getting as much education and information as possible. When I first started investing in real estate, I listened to every Bigger Pockets podcast. Yeah. And I also bought Jay Morrison's course. And I also bought like a bunch of other people's courses.
Yep. Same.
And so it's like you have to have so much knowledge that it's kind of tough to make a mistake. Like you just know so much that when you make a mistake, now you're just like, okay, all right. It's not like the end of the world. It's like I know so much that if I made a mistake, then it's a problem. Like it's either a problem in my process, a problem in whatever. But like just be a sponge in the beginning. I know a lot of people there like, man, I gotta kill it super quick. And I mean, the good thing about options is you can kill it super quick, but I want to say like it's still a journey. Mm-hmm. I've been doing this for years. I'm sure Ian and everybody else has been doing this for years. And so it's like you still have so much time in your life to get to it. Granted, taking courses and getting involved in all these different things can help you kind of skip steps. But you still got to be patient. You got to be patient with the process, but it works. I feel like options are a cheat code. They're a cheat code because if you're just trading regular stocks and you get a dope win, it's not going to give you the ROI that we need. If you're starting with whatever money you're starting with, you need to do some flips. And then once you get big money, then you can afford to get your little 12%, 15%. But in the beginning, you got to be aggressive. And that's what options does for you.
Yeah.
So when you're looking for stocks, what draws your eye to a certain stock?
A lot of times, for the most part, I've been really trying to, I'm trying to look into like the future more. Now I'm looking more into like what makes sense right now and what will make more sense. I mean, yeah, what makes sense right now, and then will it make more sense later on? I.e., tech, right? Now I know like a lot of people when they think of tech stocks, they think about like Netflix, Teslas, the whole thing, Facebook, Amazon, Apple, Netflix, Google, and I've traded 4 out of 5 of those, and they're great. But at the same time, the value in just seeing like where it's going, and it doesn't have to be tech. It could be a retail company. And I just try to see like, I might see like, okay, how long have they been around? would it make sense for them to even be around the next 5-10 years? Why? And for example, Home Depot is good. UPS, let's take UPS for example. UPS, FedEx, those two, I've traded multiple times, and I've made a lot of money with both of those multiple times. And not just because, oh, UPS, everyone's been using them. It's like, yeah, but UPS has been around, and they're probably going to continue to be around. And pandemic or not, people are still going to need packages shipped.
Right.
It's really, I mean, the biggest three competitors when you think about a courier or delivery service, you think of USPS, United States Postal Service, you think of FedEx, you think of UPS. Now, yeah, you got DHL out here. We got one called, you got like the local ones, but for the most part, yeah, USPS, FedEx, and UPS. So it makes sense. So I do look at how long they've been, and then at the same time, just because they've been around doesn't mean that their stocks are gonna grow like that. Right. Yeah, I guess kind of like what I said earlier, just I look at the history, I look at where they've been, how they've reacted. Take the pandemic, now going back to that point, yeah, people at home, people shopping online, Amazon, it makes sense, UPS, FedEx, I mean, we use them at my job all the time, and it just makes sense.
It makes sense from like a risk management strategy, because you want to buy something that is likely not going to go out of business, because if it goes out of business, then it goes to zero. And so you want that to be very unlikely. They were here before the pandemic. They'll be here after the pandemic. Yeah. And there's not too many people. There's not like some up and coming shipping company that people are over here afraid of that's using drones or something. They could take them out.
Right.
But because of the surge in activity, there's some upward opportunity. And so it's abnormal opportunity. Why? Because people can't go to the malls. People can't go to their local whatever. And so now they are shipping more. Who's going to benefit from that? FedEx, UPS, and USPS. And so it's like a risk management strategy. And it makes so much sense. And you can kind of use, it's like sometimes you take an analysis and you just plop it on top of another stock. It's like, okay, like this is what I use to make it make sense here. Let's see if the same strategy makes sense for Apple. See, the same strategy makes sense for Google. The same strategy makes sense for Tesla. It's like it's a similar, you're doing a risk reward ratio. Like what's the likelihood that it's going to drop versus what's the upside potential?
No, I agree. If I could just throw something else in real quick with that. So being that we're in a pandemic, one of the things that I also look for, especially now that we're at home, is a lot of these, some of these tech companies like are hiring, right? So Fastly, for example, the one I told you I traded and still trade, they, even when the pandemic started, when the shelter in place started, they were still hiring. Like I would go on LinkedIn and I'd be like, man, are they even like what is this? Excuse me, is this company gonna kind of flatten out? Like, and I looked and it was, and then on top of that, they were hiring in different places. So I'm like, okay, that's a good sign. They still bringing in people. The company is doing well. So I just like, it just made sense. Versus you got some like restaurants, I mean, they cutting people left and right if they haven't shut down. It was like, no, I don't think I want to invest in maybe a particular restaurant. Look at the Cheesecake Factory. They had some type of news where some of their locations were gonna have to go out of business. I mean, yeah, I can't go there and eat. So that makes sense, right? But with these tech companies, it's like, yeah, you got to work from home, but again, the work still has to be done. Like that company still needs to function, which means we can't necessarily get rid of a lot of people unless we're trying to like downsize, which a lot of these tech companies are not trying to do. They still got to function. This pandemic, it won't last forever. So it's like, yeah, we still need to continue to hire and bring people in to keep the, company above water. So yeah, going on LinkedIn and doing a little bit of research and yeah, that stuff, that helped.
I feel like education is so important. And so like, yeah, courses are one thing, but you also got to be in the news. You got to be in those reports. You got to be on those conference calls.
Yeah.
You got to be in tune with what's going on. And so it's like, it never really stops. And that's honestly the reason why I created the community, because you can teach somebody the skill, but tomorrow that skill changes because the market changes. The macroeconomic system has changed. There's more news that's come out. And so you have to constantly kind of follow people as they're doing this to make sure that you're still giving them that support and lifting them up and making sure that they are able to execute what they need to execute properly. What indicators do you use? Do you use any like moving averages, any of that cool stuff?
Cool stuff. Yeah, it is cool, and I don't know how to do most of it. But actually, I just started messing with the RSI, the relative strength index. That's for those that don't know what RSI is. RSI and volume have been, I would say, for the past like 2-3 weeks, RSI and volume have really helped me out. Some people don't know, but like the volume, you know, that can kind of confirm the direction of that stock. So,
what do you mean? How does the volume confirm the direction?
So you may have a stock that the volume, meaning like how many people are trading it, and as that is going up, that more than like, for the most part, as the volume is going up, the particular stock is going up, and it's boosting up the value of that particular stock or company. And then sometimes what you can do is you can take time, you could look at some volume and notice it dropping, and 9 times out of 10, if the volume is coming down, 9 times out of 10, then like the share price or the stock is coming down. And sometimes it just ain't moving, and it's like, ain't nobody trading this, nobody's buying, it's not moving. I'll give you a prime example. Lowe's, I was trading Lowe's like 2-3 weeks ago, and the volume is very low. In fact, also what I did with that was what they call on Robinhood, when you have Robinhood Gold, I think it's called like level 2 information or something like that, where they get a lot of information from Morningstar. And you can go on there and it'll tell you on a particular stock the highest bid, I believe, and like the lowest ask or something like that. And it'll tell you how many. So it'll say, okay, Lowe's, maybe only one person is willing to pay, say, 148, but then you got like 20 other people that say the lowest that I pay for that is like 144. And then you go back and look at the volume and be like, oh, ain't nobody buying this, ain't nobody trading this. So if it does move, it's going to be very minimal movement. So that's what I mean in terms of the volume. And then in terms of the RSI, relative strength index, also on Robinhood, on your like tablet or iPad or computer or laptop, you have, it's already preset for you, and preset meaning like you have a low number, 30, which usually means that it is being oversold, and then you got the 70. Around the 70 is overbought. And what that means is like, and shout out to Billionaire Billy on Instagram. I think that's like Billionaire Billy.
He's in here too.
Yeah, that's a good brother right there. He actually, I saw him talking about RSI one time. Yeah. I didn't pay no attention. This is back when I didn't have a strategy. And I was like, you know what? I need to learn that and learn what it means. So I did it. He explained it to me, kind of helped me out, and told me, he's like, yeah, man, that he lived by that, you know? And so I have been using it ever since. And so for those that don't know, when we talk about the 30 and the 70, so 70 meaning like overbought. So when that indicator, the RSI indicator, is pushing like 70 and maybe even above, it's like, okay, that basically in a nutshell, that means this thing got to drop. This stock has to drop. Everybody's buying Amazon. It's at like an 80 or a 90 on the RSI chart. And it's like, okay, now I know that it's hitting like a peak. I know it's got to come down. And you can use that, as you say, to double down when it dips. Or I like to say, what do I say? Save the chips to trade the dips. Like, save some of your money so you can throw some more in when that stock dips. So when it's coming down, approaching like 40, approaching like 30, and sometimes it'll even go below that 30. It's like, okay, now you know you got some cushion for it to shoot back up to that 70 or 80, depending on what's going on also, exactly. Research. because it doesn't always happen like that. I've had times where I'm like, oh, cool, I'll be able to recoup all of these losses, and then I either recoup nothing or it's just a little bit. So that doesn't always happen, but that when it does go down to that 30, it does indicate like, okay, cool. Now people are going to start buying it, or it's a sell-off. It could be a sell-off. I noticed that happened with Netflix. I got burned real bad with Netflix earnings. That was another one where I thought it made sense. Like the numbers made sense, the estimates, the revenue, like past guidance, it just made sense. And
I've never had success trading Netflix into earnings.
No,
just because people already assume it's going to do well. And so it's one of those situations where it'll be like an earnings run up. And so run up into earnings and people are like, yeah, they're reporting earnings. And so you got to take your profits before earnings hits there, in my opinion. That's just from my experience. I've literally never had success, and I've tried it like multiple times.
Yeah. And that's funny you mentioned that, because that's exactly what happened. They had earnings on a Thursday. Okay. Now, I don't know if you remember, but the week before they had earnings, it was a Wednesday, right? Me and my barber was on the phone, and we was talking about Netflix, and it was at like 486, like 490, something like that. It was under $500. And I was like, yeah, that looked like a pretty good one to get in. Like they'll probably grow some before earnings, right? So Friday come around and I'm in this group chat, and I kid you not, Todd, I'm literally watching Netflix go up like by the minute. It was like 500, 503, 505, 510. I'm like, damn, do I jump in now or is it going to dip? 515, 520. I believe in a day or two span, it grew like $45 to $50. That was the run up right there.
Yep.
And then
that thing was trading at I'm looking at like 570. When did they report earnings? Like early July, mid-July?
Yeah. It was about early mid-July. Yeah.
I feel like that's a situation where you have that RSI, and the RSI is going to tell you to get out. And a lot of times people, they ignore the RSI. Don't ignore the RSI.
Yeah.
Do anything but ignore the RSI.
Yeah. Now, can I ask you a quick question though?
Yeah.
One thing I always get confused about, because I was talking with someone and they had took your course, and they're also in your community, and they were saying like, okay, isn't Todd kind of contradicting what he said about he likes to trade during earnings season? But then he was like, but everybody in the community is like, nah, don't trade through, like catch the run up, or if they drop it. And so I was like, did he specifically say trade through? Or, you know what I'm saying? So can I get your clarity on that?
Yeah. So I'm actually glad you're asking this question. And I would say that different markets call for different strategies. And so there is a point in time where it made sense to trade through earnings. And I think now, because of COVID, because of the state of the economy, because for the longest time we've been trading at the top of our market. Like before all this COVID stuff happened, we were hitting record highs. It was record high after record high after record high after record high. And so that's, I guess, like the equivalent of the entire market trading at a high RSI. And so we had to come down eventually. And so COVID creates a unique situation where you kind of don't know what's going to happen on earnings.
Yeah.
You can expect great things and you can still get hammered. But I feel like the strategy kind of still plays. And so what we're doing is we're kind of pivoting, and we're saying like, okay, earnings is still a good time. That's the catalyst. However, what we've been finding is stocks are falling off after earnings. And so a lot of times you have to kind of adjust. The tools are the same, but the strategy might have to change. And so trading through earnings kind of made sense at that time. Now it kind of makes sense to take your profits before earnings. However, if you don't get that movement running up into earnings, there still might be some opportunity. So the strategy is ever changing. So each stock trades different. So what might make sense for Netflix might not make sense for a company like Etsy. And so unfortunately, when you have companies that are like big in the news, like all these FANG stocks, you're probably going to get not what you want out of earnings. And we saw that with Tesla. We saw that with Netflix and
Uh-huh.
Amazon. It's kind of an outlier a little bit because they're still in the e-com space. And so they
Right.
had that surprise upside where they still benefit so much from COVID that
Mhm.
there's some opportunity to be had on the upside, and maybe even Apple's the same. And so
Right.
I would just say that there's no cookie cutter answer. There's no black and white answer. There's no do this, do this. Really what we're doing is we're just bringing together a bunch of strategies, and we're trying to find out, like, based on what I know, this is what I can project with 90% certainty. We can't say it's going to be 100% certainty. We could just say 90% certainty. But I would say that, like, if you don't know, you might not want to trade that opportunity. And
Mhm.
so that's why, like, for me, I avoided Amazon. And so I'm not trying to make money on every trade. I'm trying to make money on the trades that I know are going to make money. And so for me, it's like I'm over here and I'm looking at, like, I've done well in Etsy. I have a long track record of doing well in Etsy. I have a long
Okay.
track record of doing well in certain stocks. I'm going to stay there. But if I
Right.
run into a Netflix, I'm avoiding Netflix. If I run into Amazon, I've tried to trade Amazon. I haven't been successful with it. And maybe that's an earning run up, or maybe that's a unique situation because there was no COVID in 2018. But now things have kind of changed. So I feel like that it's there's no black and white answer for that question. I would just say you got to kind of approach it differently. I think that you can win running up in the earnings, and then you can also win swinging through earnings. You can do it both ways.
I think too, though, real quick, because you mentioned adjustments, and I think some people believe or think that if something doesn't work, some people just kind of blow it off and they're just like, it just didn't work, so I'm just do it again. It just didn't work with that company, I'm just do it again. And this kind of goes back to what I'm saying, like, learning from your mistakes. Maybe you should figure out why, right? So, like, okay, like you said, COVID got everybody shook when it comes to earnings. You know?
Right.
I mean, I was successful with UPS. UPS treated me very well. FedEx, actually, you know what? FedEx was my first earnings play, and I really have to say that's probably why I'm where I'm at right now, because that really propelled me. But again, FedEx, it made sense for obvious reasons, but making those adjustments are important because, like they say, when business is going well, you capitalize, right? When you step harder down on that gas pedal, and when business is down, you make adjustments. And so, yeah, the COVID is here. Maybe it's not smart to trade through, clearly, right? Because I'm gonna just keep it 100 with you. I'm like 0 for 4 this week with earnings, and I'm ready to cuss earnings out right about now. Because what's funny is, like, I say 0 for 4, and it's like a different 0 for 4. It's like they beat and then they fall off. They've been. I mean, Clorox.
Which company? Clorox. Let's check.
Okay. So look, with Clorox, right? That was one of those. It reminded me of what you said. Like, you could do everything in the world. You could read the news. I mean, you can do all the due diligence in the world and don't swing your way. And sometimes news comes out that you really had no way of knowing. Prime example, Clorox beat earnings. They killed earnings. But they then also announced on the call that they got a new CEO. Well, investors don't. I don't know this CEO. It's just like when you're in class, you got your teacher, right? Remember when you was a kid, you had your teacher, professor, and he was like, oh, yeah, I know Miss Keisha. Like, yeah, Miss Keisha, cool. She let me do this and that. And then Miss Keisha says, oh, I got a substitute coming. And you just don't know how that. You're like, oh, yeah, no, I don't know nothing about that substitute. I'm not about to, like, you don't even care. The investors, they don't. They got a new CEO. We don't know about the CEO. And it dropped. They beat, and then they dropped. I think I lost a good, like, 4,000 on Clorox because it happened in pre-market. And, yeah, I was
How long
on
was that contract?
Say it again.
How long was that contract? Was it like a weekly?
No, I had bought it. The expiration was, this? Did they have earnings this past Monday? What's today? Wednesday? Yeah. So they had earnings this past Monday. So it was to expire this Friday. I had bought it though early last week. Earlier mid last week.
Like, the logic behind that was just we're going through a pandemic. People are trying to be overly clean. They're going to be getting cleaning supplies. Was that the logic that kind of led you into that trade?
Yeah. For the most part, yeah. It just makes sense like that, yeah.
So my thing with Clorox is I don't like buying companies that are too established.
Explain
Because
too established.
so let's see. Clorox was founded in 1913. Like they're a 100-year-old company. There's not too much growth that you're going to find out of that. Earnings or no earnings. And so for me, that's a factor that I take into consideration is also how old the company is, how established they are. Clorox is, I mean, I'm surprised they aren't even owned by Johnson & Johnson. It just seems like that kind of thing. And so, like, if you look at the past 3 months, they're up 16%, but even that is not really killing it. It's like 33 bucks, but it took 3 months to get to $33. The last month they're up $17, and that's impressive. Last week they're up $5. And so, like, with options, it's not just the percentage, it's also the dollars that it's going to change. And so on one hand, I probably wouldn't have got into Clorox. I would look into something that's a little bit more prone to pop. So I'm looking at something where people don't really know the true value of it. And so then when earnings hits, then they see what it's worth because it's profitable, it's unprofitable, what have you. Like Tesla wins because nobody really knows what what it's worth. They're just guessing at this point.
Yeah, that's a speculative one right there, Tesla.
But what I would say is the chart is like great. So if you're buying this long term, it's great. And so that's why weekly chart, I mean, I understand why people do weeklies because they're less expensive, but you still got to protect yourself on the back end.
Right.
I mean, a great company is a great company. And we've seen that because you look at their chart. And so when they go through earnings, it might get hit. And you're going to take the brunt of it because you didn't have any extra time to wait.
Right.
You got to kind of buy that time to protect your principal.
Yeah.
That's just my thoughts.
Yeah. And I remember you spoke on that. Was it an IG live? I can't remember, but you actually had mentioned how you don't really trade too much, if at all, Teslas and Amazons. And you said if you could hit big on them, because I have, and then you was like, you can also like get burned real bad by them. And I had that happen too. So yeah.
I feel like the big wins are great, but the consistent wins are what we're looking for.
Right.
You can consistently hit and also consistently protect your downside. Now we're talking. Now you can start like replacing your income. But it's like it's dope to get. I love the big wins. Those are great, but I don't like the big L's.
Yeah.
And so that's why I'm willing to walk away from a trade that could potentially burn me, even if it could potentially make me money, to then go after something that's gonna for sure make money.
Right.
That's what I'm looking for. I'm looking for a chart. I'm looking for the news. I'm looking for everything to be perfect. That's what I want to look for. That's what I want to find. I don't want to find something that like, because I've done it before too. I found something that was like, don't do that, bro. But I was like, nah, I'm gonna just do it because you never know. and then it's like you get burned. So
yeah.
I'm gonna ask you a few quick questions, and then we'll open it up to everybody who's watching. But my question would be, let's see. What would you say was your most successful trade?
Most successful trade. I would say probably Shopify. So leading up to that, I played FedEx earnings about early July, late June, I believe. And I got a few, maybe like 4 or 5 contracts, and they skyrocketed. They jumped like $20, I believe, like $18, $20. And so it had brought me a decent return. And so at that same day, I was looking up Shopify, and I was like, okay, man, Shopify is trading pretty high. Like it was, I don't think it had touched 1,000 yet, or it was right around. And I was like, why? Like, why is this thing trading high? And so, I mean, I can't think off the top of my head, but a lot of companies like use Shopify for their e-commerce, and then you think about like online sales. if you think about, for example, all of these ads that pop up on, say, your Instagram or your Facebook, whether they're selling clothes, glasses, shoes, masks, you know what I'm saying? A lot of people, Shopify, and then a lot of big companies are using Shopify as their way of getting the products out and getting their sales done. So Shopify, after doing my due diligence on that, I think, let me see, I had it out for like 2 weeks, right? And I played it the day after FedEx earnings. And if I remember correctly, the first week that I traded it, that Thursday to Friday, which was like the end of that week, I placed that trade Thursday morning. And by the end of the week, I want to say I was up 7,000. And then I traded it into my expiration date, which was the very next Friday. I think it had brought me like another 8 or 9. So it was around like 14, 15,000. But the reason why I say it was most successful, I just say because like my research and due diligence behind it. I'll say my research and due diligence behind it. It just, everything just aligned. And I had kind of came out on top with that one.
Are you following call outs? Are you finding your own opportunities? Or are you kind of like doing a combination of both? What's that look like for you?
I haven't really been messing with the call outs. I'll say this though, I do go figure out why. Like I'm like, okay, why did they call out? Why did they call out? Let me think. Why did they say put a put on Kodak? I mean, why did Kodak come out of nowhere? What was it? Some type of fund, or they got like some type of funds for some healthcare product or something? I mean, Kodak was very speculative. We all know. I haven't heard the word or heard about the cameras Kodak since I was a little kid. Okay,
right.
So but then to just come out of nowhere and get these certain amount of millions, it was really a pump and dump. It's like, let me just hop in here and just grab this quick bread. But anyways, back to the point. I do like to see why Khalil, he's great at what he does, by the way. I don't know if he's on here, but he's great. I do like to see why he picks a certain company. And obviously he's a seasoned investor. He knows what he's doing. That's why he's in that position he's in the community, right? So something has to make sense. So I do like to use it to help my research, because while they may trade, I don't know, a Microsoft, I might say, oh, okay, that makes sense. And I might be trading, I don't know, Datadog, you know what I mean? Another tech company. But if my research on them is kind of aligning with why, say, Khalil called out Microsoft, then it's like, oh, okay, I see why he traded that company. So yeah, I do use it for research purposes. But for me, I do like to kind of stay under the radar and kind of like make my own plays. And lately, I would say within the past month, right when like the Teslas and the Amazons really started flattening out, and like just the big tech guys in the tech sector, I started moving to tech ETFs. For some people don't know what that means, exchange traded funds. What that is it's pretty much like a compilation of companies. So like, for example, you might have an oil ETF, and that might be like top performing oil companies. I'll give you one, ARK, right? ARK is a big one. Mark Monroe has hit on ARK. ARK, they got Tesla. I know they got some NVIDIA, I think Square. But anyway, they have a compilation of these top performing tech companies. And what happens is you kind of don't burn yourself, because if I was to trade just Tesla, right, and I get burned, I got burned by Tesla. There's no coming back from that. Ain't no coming back. I got burned, right? Because all my eggs was in the Tesla basket. But if I was to trade an ARK or a TQQQ or a Triple Q, if I was to trade one of them, it's like, okay, cool. Tesla might not be doing that good, but NVIDIA is, Square is. And so you have other companies, so kind of it can balance out. Or for the ones that's not performing well, you have others that can recoup. And so, yeah, trading the tech ETFs have definitely been a safe bet for me. And I mean, they've been performing pretty well. So, yeah.
That's good information. Wale, he does that. And it's funny because you wonder, like, why Wale? Why do you just trade the S&P index? And it's like, it's an opportunity. It's like you might not be hitting the moon, but you're also not like digging a grave.
Right. So, and it's consistent. Like you said, it's consistent. It's consistent profit. And like you said, yeah, they might not boom $50, $60, $70 in a day. You may not make 20 bands or 20,000 off of them tomorrow, but it'll get you something versus being down. Because if I can just throw this out there, and I don't know if you was gonna ask me this, so excuse me if I'm getting too far ahead. But my worst was putting my eggs in a couple of those tech baskets. I had a day. It was on a Monday, man. I remember it too. Actually, yeah, it was on a Monday. I had placed some trades. I placed one with Tesla. I think I might have had an Amazon in there. I can't remember who else. You probably shaming me right now too.
You're just doing the most, man.
But yeah, and everything was good, man. Everything was good. And then the governor, Governor Newsom, he put out there he shut the economy down, or he shut everything down right around 12 noon, like 11 or 12 noon, and everything plummeted. Now, I do want to say this though, in my defense, unfortunately, I didn't necessarily lose because the market crashed. I lost that day because I made a very costly mistake of not knowing my stuff. And what I mean by that is, so you know the 25K rule where like you can't day trade if you don't have 25K, right? I unfortunately was uncertain about how that worked, and I should have gotten clarity long when I first started trading. What it was I thought that it had to be 25K like in your buying power. Well, I was told it's like total equity. I did not know that, and I should have known that. So I'm thinking, oh, I can't sell till tomorrow, so there's nothing I can do. Put it out there. I was up 21K for the day, 22K for the day, feeling good, everything. And then that happened, and by Tuesday morning, negative 10,000. So took a $30,000 hit. I was sick that Monday. Oh man, I mean, I don't know how many people I text. I told them pray for me, all type of stuff. I don't know.
There's a very good reason why I tell people to take their gains and go. If you're up $20,000, you have no reason to want for anything else. And it's like I would rather you be up 20 grand and be up 20 grand than wait it out and then fall, because making 20 grand is impressive.
Right.
Like, you know what, I can make 30. I can make 40. I could double this.
Right.
Interestingly enough, a lot of times what happens with these stocks is that first initial pop is about as high as it's going to go. And so what happened is then the only place for it to go is down. Sometimes it can go flat. Maybe it might go higher, but especially like if you're playing off a catalyst, that first initial pop is the largest pop you're going to get. And so you got to take your gains. You got to move on to the next opportunity.
Yeah. And when it dropped, let's just take Tesla. Like, I think Tesla, didn't it, if I'm not mistaken, I believe it crossed 1,700. I think it was approaching 18 or something like that. Tesla has been hanging around $1,500 for the past like 2-3 weeks. It ain't really been doing much, and I'm just, again, like, it just dropped. So
the thing is, I have a course called Crisis Money, and it talks about value investing. And I always tell people, like, why value investing is so important is because it's going to give you the largest upside with the least amount of downside. And there's a reason why Warren Buffett is a value investor, and he's not a growth investor. He's not a tech investor. He's not all these different things.
Right.
He's probably the richest investor in the world. And so for me, I'm not chasing that stuff. I'm looking for the diamond in the rough. I'm not chasing new highs. I'm not buying bankrupt companies like Hertz and Kodak.
Nikola.
Like, it's okay to walk over opportunities. It's okay to see other people talking about something and be like, you know what, I'm okay. You got to trust you. And I feel like sometimes people don't trust themselves enough to just pick their own stuff. They're like, oh, well, this person is here and he's smart, so I'm going to follow him. Don't do that.
Yeah.
My last question to you is, what is your best advice for the people that are watching tonight?
I would have to say pretty much what you just said. I actually got that in my notes. Is build enough trust. Actually, get the best understanding that you can get when it comes to this. When it comes to trading, what I mean is understand how stocks work. Understand, what trading is all about. Understand understand your indicators. Pick one or two or whatever. Actually understand them. I think the biggest thing is having an understanding of how all of this works, why it works, when this happens, why that happens. Like just having an understanding, because like I said, I know people that, and you probably know people that hit off luck or hit off hype, or just it was popping and I hit, and then but the minute they down, you don't even hear from them. I got group chats, and this is not to down anyone. This is for everyone who is watching this to learn. I'm in group chats where people it's popping, right? Stock going up. Everybody is going crazy, and then the stock might go down, or that particular sector that they trade may not be performing well, and then you don't hear from them anymore. And a lot of times, not all the time, but a lot of times, people don't take the time to actually learn. So they're like, "Oh, I don't know about this this trading thing anymore. Oh, I don't know if I'm picking good companies." Well, you don't know what you don't know, right? So if you don't know, then go find out. That's the whole point of asking questions. That's the whole point of Google. That's the point of Siri. I mean, so I just say that to say to get the best understanding of this, and because every time you and this is fine, I try to help as much as I can, but every time you might repost something that I put up or whatever, a lot of folks come my way with the questions, and it's cool. Huh?
I didn't know that. That's funny.
Oh, hell yeah. Oh, hell yeah. I mean, thank you for the followers, but goodness. But I just say that to say, I'm not a magical dude. I don't have any tricks up my sleeve. As I said in the beginning of the Zoom call, I don't have any special like strategies or nothing. I take a little bit from the people that are where I would like to be in terms of success with trading. And I figure out whatever they said or did, I try to validate and say, why does that make sense? Why did it get them there? And I try to incorporate it into my own strategy or to whatever I'm doing. And then I say, okay, now I'm going to stick with this. Obviously, I have to make adjustments. I'm going to trust that and just keep pouring into your trust for yourself. And just don't start researching. Like, that's one thing. Don't start researching because, like you said,
never have too much knowledge, man.
Nah. And the news could change tomorrow, and you got to research something else about it. You know what I mean? So yeah, I'll just say just get a high level understanding and just continue researching.
Cool. So I'm gonna fire off a few of these questions, and while you're answering them, I'm gonna grab my food because I'm hungry. There's not that many, but I'm pretty sure as we start doing this, more people will ask more questions. So this first question is: do you prefer to buy long-term or short-term options?
I would have to
start firing off questions. By the way,
say it again.
I said they can start asking questions in the chat.
Okay. Yeah. As of right now, I'm starting to look at both. In terms of when it comes to long term, I do look at a lot of tech ETFs. For example, ARK is one of them. XLK. I have contracts for that one that don't expire till January 2022. And that's more of just because, I mean, number one, we all know, as the saying goes, tech is not going anywhere. And as the pandemic gets better or the shelter in place gets better, eventually things will start to propel and be more of on a upward trend, not just trend as in like on the chart, but just in business. So yeah, ARK, that's a good one. Again, I'm not telling you to do it. I'm just telling you what I invest in long term. ARK. What was the other one? I think it's ARK with the 2 Ks, not with the W. XLK, XLY. That's another one. And then as far as short term, I mean, I kind of stick around my same few little plays or whatever.
What parts of the people that you've been following do you utilize? kind of a broad question, but maybe you can kind of point them in a direction with like a sentence or two.
You mean like what have I gotten from them that I utilize?
Yeah. So I would say maybe like Wall Street Trapper for this, Ian for this, Mark for this, whoever.
I'll say with Wall Street Trapper, one thing that he's super, super big on is being ahead of the game. I'll give you a prime example. He said, what did he say? He said, instead of trading the airlines, he's like, he didn't say trade. He's like, why don't you buy into the companies that fuel these jets? You can also invest in, he didn't say the route. He said something like that, or cybersecurity, the CrowdStrike, that's one of them. CrowdStrike, there's one called VMware, VMARE, I believe. That's one that I tend to trade every now and then. That's another cybersecurity company. Once again, they're protecting our information. Now, everyone else, they see the Facebook, they see the Snapchats, they see Pinterest, they see, but again, it's like on the back end, you got somebody protecting all of our information. So, I mean, obviously these tech companies going to buy into them because they're protecting our info. Like we need them. The companies need them. So yeah, staying ahead of the game, I guess, from Wall Street Trapper. Mark, I mean, I was on a live with him one-on-one one day, and I swear, I mean, I hate going against the grain, and it kills me every time. But he also is like, it's not a good time to be trading through earnings. I mean, clearly for obvious reasons. And then Ian, I'll be honest, I haven't listened to him enough. The podcast that I have went on with him, or that I've listened to that had him on there, he was like a co-host or whatever, but I didn't, like I said, it wasn't like where he was like a main speaker, so I couldn't really say.
This person says, what sites do you use for research?
There's a few apps. I mean, Investopedia is great. I like Investopedia, especially just for knowledge around just trading and getting understanding. I got Market Watch. It's like a black and green emblem. Seeking Alpha. It's like an orange and white emblem. Bar Chart. That's one I got from Mark, actually. Bar Chart is another one. Yeah, I mean, yeah, that's pretty much it. Yahoo Finance is good. And then sometimes I just Google specifics, right? Like I might really just Google, like, I don't know, where did Jeff Bezos go to school? You know what I'm saying? I mean, I don't know. It just kind of helps when it comes to like seeing the value in, like, I don't know. I just feel like the more information, the more it can determine whether you want to trade that company or not. You know? Yeah. Like you might want to look up. You might want to look up some CEOs, and I learned this when I was in multi-level marketing. I'll make it fast. When I was in multi-level marketing, I would be with these companies, and I might make money, right? And then like a few months down the road, the company will fall. The CEO's background of that company was like, oh yeah, this person was locked up and had to sit down for like, I don't know, a year for embezzlement or some type of scams or fraud. And you'd be like, whoa, had I known that, maybe I wouldn't have bought into them. So sometimes that little bit of research might be too much for some people, but it can be a deciding factor in whether you see value or whether you deal with that company or not. So sometimes just kind of, I don't know, those fun facts, I mean, they come in handy.
Let's see. This person says, what are the gates? I don't know if you know what that is, but I guess Wall Street Trapper says the gates. But if you don't know the answer to that.
I wouldn't know. I'm sorry.
Well, I think that we exhausted all the questions. I think they got a lot of value out of this hour and 15 minutes. So I appreciate you for taking time out of your day to help the people. Hopefully they got something from this. As I said earlier, you can follow him on Instagram at CALLME100K. Good luck to you, man. Good luck to everybody who is here. I always tell people to take your time, start small, and learn.
Yeah.
Figure out the process, and don't be out there trying to go for the gusto too early.
Yeah. Learn before you earn, for sure.
There you go. So
I appreciate it.
all right, man. You guys have a good night, everyone.
All right, you too.